Hang Seng especially is trading with gains of 0.9%.
It was a mixed set of numbers coming in from ICICI Bank.
On the downside, the level is 22,976. That is a swing low. The government has invited application for SEBI chairman's post by the 17th of February.
I saw the value and I thought it's a good value to go after.
22,925. We're basically back at the lows that we were talking about earlier.
The government has guided that the capex will pick up, and we are seeing signs of that being reflected in the last quarter itself in the long products.
Rural will remain strong going forward, even this fourth quarter.
Benchmark indices are down over 1%. Real deal came in on 20th of January, exactly a week ago, when DeepSeek released its latest model, DeepSeek R1.
They are going to discuss resumption of bilateral ties.
The indices were trying to attempt a recovery, but now they are also firmly in the red, 250 points down on the Nifty, but the actual pain, though, is in the broader markets.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it is painful session this Monday afternoon. Markets are absolutely cratering. And when I say markets, I don't mean the Nifty, which is down just about 1%. It's the broader markets, anything between 3 and 4% down on the mid and small cap part of the market. 10:1 declines to advances. So just that kind of a day where very few places which are actually up and about in the green. I'm Prashant. With me, my colleagues Rima and Surbi here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon, folks. But today, the one thing that we can say, now that it really helps, that this is not just an India-specific problem and fall, which is what has been the case for most of these days. Today, this is global in nature. I'm looking at futures right now. Look at the NASDAQ futures. They're down 3%. The S&P 500 futures are down 2%. So this is sort of a bigger issue at play.
Surbi, actually, more than anything else, that is the problem. Because so far, if the US had all this DeepSeek and this China, and Rima will talk more about this, but if all of this did not happen and US was okay, we were, for the last couple of days, we were wondering whether markets are they are oversold and there is a bounce which is due. Now, but if later today you find NASDAQ down 3% and you wake up in the morning with a 3% cut, then, that bounce the case for a bounce disappears. Yeah. So I think that is the new unknown which has kind of been thrown into the mix. Otherwise, around here, I think it's about time that you actually find a decent kind of a bounce. The other thing, of course, which I find a little peculiar is that while the small cap index is down 4, mid cap index is down 3, the Nifty is not selling off that hard. It should have by now, with these kind of broader market levels, the Nifty should have also broken down. But that is not happening in a very meaningful way. So you're kind of holding with about a 1% cut. So, but of course, otherwise, broader markets, as I said, declines to advances, etc., pretty bad. And of course, the US thing, we'll learn more about what the market wants to do. Remember, the cracks in US, large names like NVIDIA, etc., started Thursday, Friday, last week. Friday, especially, NVIDIA was down about, I think, 4% or so. And as Surbi said, there's a big 3% odd cut coming through on the future side this morning. So I think that's the newer element which has kind of been thrown in with everything else which has been happening in any case as far as the market here is concerned. Guys.
Well, Europe is also down nearly 1% and more than 1% when it comes to the German index. So the DAX is down about 1.25%. The key issue at hand, as we've been pointing out, is that so far OpenAI's ChatGPT was dominating generative AI. Now, over the last couple of days, and 2 months back, you probably wouldn't have even heard of DeepSeek, but now you have a rival, which is it's a free alternative to ChatGPT. It's made by a Chinese hedge fund company. It's called DeepSeek. On the 20th of January, that's exactly a week back, they revealed their latest model, which rivals OpenAI's latest model in terms of efficiency and all the parameters, in terms of reasoning, etc. But it was made at a fraction of the cost, at about $5.6 million in less than 2 months, and with far inferior and fewer GPUs in terms of chips. So therefore, the street is worried that will DeepSeek in a way burst if there was an AI bubble in the US, because stocks like Nvidia had gone up by nearly 135% last year. Will it burst this, stocks like Nvidia, burst the bubble there? Will Magnificent Seven come under pressure? And that's really the issue at hand. And even back home, there shouldn't be a rub-off impact, but the tech stocks are selling off quite deeply.
Absolutely. Apparently, this released on the App Store just 2 weeks back, and it's already overtaken OpenAI in terms of the most happening app or the most popular app. So I think the word is spreading fast, and it's definitely spreading fast through the markets. So this is the bigger global issue. We'll talk about this as we go forward. What is DeepSeek? It's the newest, deepest worry for markets, I think, around the world. Just very quickly to talk about some stocks. It's a wide sell-off, so what to name. But tech is falling quite a bit. Right now, Tech Mahindra, HCL Tech, Wipro, Infosys, all the large cap tech stocks are lower, including a TCS as well. And there are hardly any counterweights for the market. So that's tech, which is down. Let's look at the other bigger stocks. If you pull up the contribution chart, you'll find a lot of big bank names lower. Reliance is lower. Tech is lower. So there is not much respite for the Nifty, which is the issue. HDFC Bank, for instance, is down 1.5%. The saving grace was ICICI Bank post numbers, and that's been the lone ranger in its own peer group as well. ICICI is the one that's trying to pull on the upside, but it's not enough. The Nifty, as we speak, is hitting fresh lows. 22,800 now is in question. But Nigel, that's not even half of the pain. The bigger brutal sell-off has been in the mid-caps.
Well, that's right, Surbhi. And that pain in the broader markets is extremely, it's hurting investors actually, because when we started off in the morning, you had 190 stocks that were advancing, and as we speak, there are still only 195 stocks that are advancing. So that's telling you that a lot of these stocks, the dip, as of now at least, is not getting bought into. And I think now the crucial factor will be when the last bull throws in the towel, that will be the time when, in fact, the markets could turn around. But for the time being, even as you all were taking that market check, the Nifty has now moved. The last tick on the Nifty is at the day's low. And a few stocks that come to mind, you have CDSL, the numbers are disappointing. The stock is down 10%. ACC, the street is trying to cut, these numbers and try to analyze it, because remember, it'll have an element of volumes coming in from Ambuja Cements as well. And adjusted for that, the numbers don't look that great. So that's why that stock as well has come off from the top of the day. Adani Total Gas is the other one that slipped a little bit. A painful looking screen, as we have been saying, a bounce is overdue, but you'll want a sustainable one from here on, because that crucial support zone of from 22,900, that's got broken. 22,800, the next mark you're looking at, we're almost there. So a very, very crucial juncture. Let's get in Mitesh Thakkar, who joins us to help us out with what is he doing. Mitesh, what are you making of it? Oversold? Yes, we are, but no signs of a bounce. How are you trading this one?
So, Nigel, a couple of things. Good afternoon. I think one, we are definitely oversold, but the gap down which happened, there was no attempt to fill the gap. Despite the fact that the Bank Nifty was doing better than the Nifty, I think the index itself showed no sign of pullback. And in the morning, I talked about possibility of Nifty heading towards 22,600, 550 zone. So I think 22,600, 550 is my target area, and I think we are not very far away from there, about 250 points away. So the idea is that don't try to get into long positions till we see a significant sign or signal of a reversal. At least the price on hourly chart starts making higher highs. Till then, I think no point getting into the long side of the market. So trade with short bias. I have a sell on Hindalco, which I would recommend selling with the stop at about 603 and a target of around 555, 560 is what I think the stock can do. And the other one is a sell on IRCTC, which I would recommend selling with the stop at 766 for targets of 720.
Thank you very much for that. Let's get to Laurus Labs. That's down nearly 10%. Well, they came out with numbers last week, and the numbers were good, the margin recovery. But today there are concerns related to its antiretroviral business, ARV business. This is after the US withdrew from the WHO. Vinny joins in for more on what the management had to say as they try to allay concerns.
So absolutely, Ima, what is the main concern coming in? And I'll just explain what this is actually. This is a funding that goes from most of the countries to the WHO. Now, US accounts for around 75% of this funding. Now, this is a PEPFAR funding, which is around 20% of the total ARV program that are going on globally. And obviously for Laurus Labs also, about 20% of ARV sales sales are these PEPFAR sales that are there. And the funding, if Trump has highlighted that he wants to maybe stop the funding to WHO, then that becomes a concern. So Motilal Oswal also said that this could cause an impact of around 9% on the total consolidated sales of the ARV business, and that is the main business for Laurus. So 9 to 10% impact of that. And maximum impact in terms of EBITDA that they expect on Laurus was around 4 to 5% in FY26. Now, when we spoke to the management, what they highlighted is that, currently, obviously, 46% of the sales comes from this ARV business. And in that, obviously, a smaller portion is something that comes in from the PEPFAR funding, which is a very small and insignificant amount in terms of funding. They said for 2025 calendar year, there's not going to be any impact of this funding that could maybe see a bit of a freeze or a stopping for 90 days is what they've highlighted as of now. So not much of a concern for calendar year 2025. Maybe post that, maybe we could see a reaction coming in. As of now, there is not any impact is what the management is highlighting. So keep an eye out on that.
Dipan Mehta of Elixir Equities is now with us on the show. Dipan, the management says not much of an impact. Analysts are pointing out that the EBITDA could be hit by as much as 5% for FY26. Where do you stand? Is the reaction a bit overdone? Because numbers are looking up.
Yeah, Rima, good afternoon and thank you for having me on your show. I think there's a bit still uncertainty around this funding and other things. So considering the market conditions and considering that the business model of Laurus is largely, I would say, supplying of APIs, which in turn is cyclical, I would just like to avoid whenever the stock reacts the way it has, there's something still deeper which we do not know. So I would just like to wait and watch, especially after a good number. So for the time being, it is an avoid. I think there are other good quality pharma shares one could look at.
Okay. Deepan, hi, good afternoon. Good to have you on. There's a raft of earnings to go over. For the time being, if you just ignore the market's fall, though it's hard to ignore. By the way, 300 points down and 22,800 is under threat now on the large cap screen. That would be a near 300-point decline on the Nifty. Let's see if the bulls can defend it or not. I want to get your sense on some of the BFSI numbers that we saw over the weekend, Deepan. There's Credac. I don't know if you're willing to, see any light at the end of the tunnel or not. But more importantly, let's talk about names like, say, an IDFC First Bank or a Yes Bank, tier 2 banks, basically. We had a chat with Mr. Vaidyanathan of IDFC First in the morning, and he was sounding reasonably confident on asset quality X of MFI. But margins are under pressure, and the market doesn't like that. Your thoughts, IDFC First or anything else that stands out for you in terms of tier 2 lenders?
Surabhi, Mr. Vaidyanathan may be extremely optimistic, but he can't talk ex-MFI. MFI is part of the company. And the management took a decision to grow that particular book so that they could get nice interest, nice spread as far as interests were concerned. And now I think they are suffering from all the kind of what is taking place in the MFI space. We are seeing major problems over there, and investors need to rethink their strategy for MFIs and banks which are overweight MFIs also. This may certainly turn, I would say, in a couple of quarters or so, but this is not as great a segment within the banking sector as it appeared to be so. Other than that, I think, valuations, everything is fine. But look, the entire banking industry is getting extremely competitive. It's like a red ocean, and there are so many banks, investors are overweight in banks, and even overall growth rates, if you look at the net interest income and the pre-provisioning operating profit for a lot of banks, it's not as was maybe a few years ago or so. And if somebody's already overweight banks, I would certainly not want to add any more bank positions over there. And selectively, one could look at being underweight banks also. IDFC First Bank, the way it has corrected, I don't think it makes sense to sell, but I wouldn't be averaging. And maybe at an appropriate time when the stock goes back by 15-20% higher, we could look at exiting our position. Having said that, we and our clients are invested in IDFC First Bank.
Okay, I completely understand then the pain and sort of the patience that you'd have to exhibit, at least for now. But that's an interesting point that Dipan is making, right? And it always comes to my mind, because when you talk to analysts, they're willing to look at businesses X of segment A or Y of segment B. But for a shareholder, it's all put together. Ultimately, if the EPS is down, if the revenue is down, it's down. It doesn't matter X of this or Y of this, or adjusted for this or adjusted of that. I think that's the point that Dipan is making.
No, absolutely, and I think it's absolutely a valid point to be made as well. I think we got a breach of 22,800, and then we've got the market coming up a little bit, just above the 22,800 level as we stand right now. I think let's talk about CDSL, right, which I think is facing some selling pressure. Numbers came through. Vamakshi is here with just the street view out there now. Vamakshi, take it away.
Well, absolutely, Prashant. CDSL came out with a weak set of numbers. When we look at the revenue, that degrew by almost 14% sequentially, coming in at 278 crores. The margins too have contracted by 424 basis points to 57.8%, and the net profit has seen a decline of almost 20%, coming in at 129 odd crores. Now, when we look at the revenue, largely the degrowth is being led by a fall in transaction charges, which declined by 29% from 83 crores to 59 crores, as well as the online data charges, which saw a dip of almost 23%. They also witnessed a degrowth of almost 36% in their other income. When you look at their operating expenses, the employee expenses actually saw an uptick of almost 2.7%. They're also investing in tech, and therefore they also saw a 23% sequential uptick in the computer tech expenses, and that sort of negated the fall of nearly 17% that we saw in the other expenses. And overall, the total operating expenses for the company declined by only 4.1% as compared to the 14% degrowth we saw in the revenue, which is why the company's margin saw a very sharp fall. Now, when we look at the other key internals for the company as well, that was also quite lackluster. CDSL net account opened in the quarter dropped to 92 lakhs. This is a 22% drop on a quarter-on-quarter basis. The demat custody, which is in rupees lakh crore, that saw a decline from 78 lakh crore to almost 75 lakh crores. This is a dip of almost 4%. So overall, a weak set coming in for CDSL. The stock is tanking in trade on the back of that.
Got it. Thanks a lot for that, Vamakshi. Dipan, what do you make of these numbers? CDSL, well, the stock looked so good just a short while back, and now these numbers have come and no mercy whatsoever. The last stick was at the low point of the day. What are you making of this one?
Nigel, my reading is that the CDSL business appears to be far more cyclical than was previously envisaged. And with primary market and secondary market slowing down, volumes coming off, we are seeing it reflected in the top line of CDSL as well. And it's still quite richly valued, I think 55, 60 times thereabout or so, trailing 12 month. I'm not completely sure. So from that point of view, I think, and it's a stock and a lot of investors are overweighted, it's done exceptionally well. So from that point of view, I think this correction may be justified. Stocks like CDSL, BSE, stockbrokers, wealth managers, RTAs are best bought when markets are in solid bear situation, volumes are low, IPO activity is non-existent. And at that point of time, if you buy these stocks, then you can ride the bull wave when the cycle turns. So I would say even at these levels, CDSL is an avoid, and you could look at even selling it off because this stock can correct even more. Next quarter may be worse than this quarter as well if the market trends remain the way they are.
Actually, you look at the entire capital market space, right? Novama is down to about $5,000. I mean, those are high flyers. Fintech had a very sharp fall. Exchanges like BSE, I think, has come off quite a bit as well, although not as much as some of the others, some of the other ancillary names there. Dipan, if markets remain bad, I mean, I think this is a straightforward kind of thing, right? Volumes will get impacted, and consequently, volume of business these companies are able to do straight away starts to get hit.
That's right, Prashant, and these businesses have very high operating leverage. So if a slight decline, also 8-10% decline in the revenue can lead to 30-40% decline in the net profits. And this kind of cyclicality is not reflected in the P multiple. You pay high P multiple for consistent, steady performers, secular growth stories, not impacted by too many cycles within the industry. But these capital market businesses are certainly not so. Last 4 or 5 years, things have been so good, we forgot that you could have a situation where 6 months, 1 year, markets could be down and activity could be low-key, which we are seeing just now. I think that was completely missed by a lot of analysts and shareholders of such capital market-related businesses.
Dipan, trend 25% lower since the beginning of the year. At 5,400, is the stock attractive?
No, Rima, actually, I'm not looking at buying anything. I look at the screen and I'm wondering why have I not sold more, considering I was so bearish for a long, long time. But I don't see any point in buying high PE stocks at this point of time. Even a minor miss on trend will cause a 8-10% decline easily in the stock price, because if investors will look at its high P multiple and say, look, what are we paying this kind of a P multiple for a business like this? Although it's got great dynamics. But look, valuation plays an important role. And I've noticed one thing, that when you buy a high PE stock, it's very difficult to get the alpha. It may appear to be so for 1 or 2 quarters, but 3-5 years down the line, you realize that there's hardly any return from such stocks. So for me, trend 10, all such high P multiples are an avoid. I think I don't look at anything above, I think above 40 P multiple. I just say, okay, let's just keep it on the side for some time. Let's look at something which is available slightly cheaper.
Okay. 1,500 points lower on the mid-cap index at this juncture. Deepan, I'm going to ask you that tough question again. I think I asked this last week as well, right? In this falling market, what to buy? Any one stock? And I'm not putting like a 2-month time frame on it or whatever. I'm saying, what to buy, say at least from a 1-year perspective, if not longer.
No, see, I think tactically investors should be overweight pharma companies. And that's something we are looking at quite closely. If you have less appetite for risk, companies like Sun Pharma, Lupin, I thought even Dr. Reddy was okay. It will do well at least next 3-4 quarters or so. So that is one segment. And we are fielding for some of the high quality platform businesses, like maybe a Zaggle Prepaid or a RateGain Technologies, could be Car Trade. These businesses, these companies are done exceptionally well. And they have created great value and they're trading at extremely rich valuations. So if they come off for some reason or the other, overall market correction or a soft quarter, then those are the companies we are looking for in terms of investing. But as I said, these are just ideas on the horizon, and they have some way to decline for us to come in that, for us to feel comfortable into looking at them in positive light.
Zomato down 35% from the highs, Deepan?
You could add Zomato to the list also, Prashant. Zomato, Swiggy, RateGain, Zaggle Prepaid, all these platform companies, even companies like Affle India, IndiaMart, Intermesh, Just Dial. I think all of these have got great business models and they're expensive. So in bear markets, you want to buy such great business model companies at reasonable valuations.
And that point that you were bearish for so long and you're wondering why didn't you sell more? I think that's an important point. But I think you now for somebody, seeing prices down of the 25, 30, 40% in some cases for individual stocks, Deepan, becomes it's psychological more than anything else, right? Unless you have a very strong view, which is very difficult to take, to sell now becomes very hard. Even though, would you agree, Deepan?
Yeah, I agree.
If prices stay here for the next 1 year, 1 year later it becomes easier because the the reference price has changed.
You're right, Prashant. Mentally and psychologically, it's difficult to sell a stock after it's down 25, 30, 40% or so. You tend to justify that now it's corrected so much and should not fall. Even I go through those thought processes. But yes, I think the time to sell for a lot of stocks is gone. And, might as well wait through this challenging period. It could last, 3 months, 6 months at best. End of the day, Indian economy, the demographics, the capital market, and a lot of other structural factors are positive. So things will revert back to mean. But as investors, we need to ride out this bearish phase.
Actually, the small cap index, Deepan, is down 14% from its all-time high. The last time we had a 10% plus correction was November 2022. That lasted 4 months. The small cap index fell 12%. So you get these, maybe the frequency of these corrections has gone down and down over the last 3-4 years of this non-stop rise, but you do get these once in a while. Of course, back then the index was at 16,000. Now we're at 22,000. So that is the other kind of thing. But we'll wait and watch. Thank you very much, Deepan, for joining us. Good speaking with you as always here on CNBC-TV18. We'll slip into a quick break, but here's something for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app from the new Apple Store or Google Play Store, or just scan the QR code now on your screens. Welcome back. 270 points lower on the Nifty. Let's welcome in Dinshaw Irani, CEO of Helios Mutual Fund, who is joining us now. Dinshaw, great to have you with us here. Thank you very much. It's all red and worrisome looking screen. out there, Dinshaw. What are you doing? How are you looking at it? What's the team's view at Helios? Your view and what's coming out of those discussions?
Afternoon, Prashant, and good afternoon to your viewers too. And thank you for having me on your show. By the way, morning I was wearing a white shirt and it's turned pink because of the blood on the streets. But anyway, Prashant, our feel is that the market, I think, is overstretching now. I mean, the fact that we are correcting so heavily, and that too, I mean, what were the negatives? Negatives were that earnings growth wasn't happening, the quarter looked really not that great and stuff like that. But despite that, we're talking about flattish earnings, right? And I mean, flattish earnings doesn't, ensure that you lose, 13-14% on your narrow indices and probably 14-15% on your broader indices. So it's obvious that there's a panic building in. And probably, I mean, hand on heart, our feel is that probably this is a time when you can, stick your neck out and say, look, I like this stock. I like the valuations which the stocks are quoting at, and I want to buy. So I'll start picking. And that's what actually we're doing. We're very nibbling right now at the markets for whatever little cash that we have and whatever little cash that we get every day. I think it's time to just go and pick your stock that you want to, which you believe is a winner, which you believe the valuations are looking very reasonable. Go and pick those up.
All right. Hi, Dinshaw. Good to see you in. So what are those stocks that you like, Dinshaw? It's come to a good level. Name a few if you can. I recall, we had a brief chat about some of these new age themes. They look good and maybe they still look good. But for the time being, some of them have come off a little bit. A good entry opportunity or any other stock that you like?
Yeah. So, you said it. Some of the platform companies are now unnecessarily being hammered down for no reason. Obviously, the IT names are getting hammered because of what's happening in China. DeepSeek supposedly is having a big impact, but I remember the same was the case when WhatsApp, the data issues were there. Finally, people came back to WhatsApp again, but I'm not saying that the same thing going to happen. But things have to work out there. So IT companies, I think, are getting hammered for no reason. So these are the few names where you want to, obviously the banking names, whichever we like, we're slowly picking them up, though they haven't corrected much as such. But wherever, and obviously, Nigel, I will not tell you the names that we are picking up for obvious reasons, but this is how it is. And each one may have their own view.
Yeah. Dinshaw, hi, good afternoon. We know you can't tell us the names, but you can give us some hints about at least what you're liking in the market, where valuations are looking attractive, and where you think at least like 6 months down the line, you as well as shareholders will be happy, Dinshaw.
So as I said, the fact is that we've been very selective. Anyway, we were very selective in picking our names in the beginning itself. So private sector, again, I'm not saying the banks, private sector banks I'm talking about. Again, there we've been very selective. We've not gone into names which are microfinance exposed and, vehicle financing exposed. We got into pure consumer banks where the franchises were pretty strong and they come out with flying colors. You saw the results of ICICI Bank. It was fairly a good result and it came out fairly well. So these are a few names in the banking space. Then obviously, as I already stated, the platform companies, we like them a lot. IT space, in fact, if anything, I think they're coming out stronger out of this mess which is happening right now. So those are some few names that we like. That's about it. So I don't think I need to name anything beyond that.
Okay. No, we won't push you. I know you have your compliance issues, but every time I hear the term DeepSeek, the only thing I can think of is that this is a market that is deeply seeking some gains. I don't know about any other kind of DeepSeek, frankly. We'll get to know more when the US trades tonight. But
actually, Subi, we believe that this will be the time period when real alpha can be found in stocks. And if you don't panic, the investor doesn't panic and continues with the SIPs and all, I think this is the time when he can really average out as such. So that's why our fingers are crossed. I think we're getting good value now. So that way.
Yeah, absolutely. Dinshaw, on a different note, we'll deal with this global sell-off, see what happens overnight. But on a different note, it's also the budget week. So right now, while obviously you won't take a budget-related trade, short-term 2-3 day trade, but what I'm trying to ask is that in general, over the next 2-3 months, would you rather position your portfolio expecting some sort of a consumer, focus budget, some consumer push, or would you go back to beaten down capex names, expecting that to remain a big focus for the government?
So, okay, Subi, that's a good question because I think basically the government had done is build on the capex. And frankly, I mean, looking at the maths that we normally work as we go into the next budget, our feel is that the government doesn't have much left to even spend. I mean, given that the GDP growth has slowed down, and obviously the additional revenue that you gather from that is not going to be that exciting. So it's obvious that, and obviously they want to keep the deficit in check. So I think the only thing that they can do is make it a very consumer-focused budget. You heard some sound bites, right? I mean, in fact, some of the government officials have gone on record saying that we've done enough for corporates, we've done enough for the low-income guys, we need to do something with the masses and stuff like that. And I'm sure they're talking about something to do with the tax or something like that. I don't know how they're going to push this thing. But obviously, the government is also cognizant of the fact that, look, consumption is suffering and urban consumption is suffering. And by the way, even after the budget, there's this RBI meet which is going to happen. I think it's going to be a very concentrated effort from both sides as such if you want to push consumption going forward. And I think that is what is needed, the need of the hour. So let's hope that it's a consumption-driven budget rather than anything else. On capex, I'm not keeping any bets right now.
Dinshaw, hi. You were bullish on the wealth management, capital market related plays. Now stocks have corrected 20-25%. Are these the sectors which you're selectively looking to buy? Tell us how you're approaching the sector which you've liked after the correction.
So Reema, we like these plays anyways, and I mean, frankly, I mean, the valuations are fairly stretched at some point. If you remember, I also said that we're trimming our positions in a few of these counters because we think the positions are pretty stretched out here. So we did that, and obviously we got some money left on the side. But I think still right now, I mean, rather looking at the way the markets are so choppy and volatile, I don't think we're gonna get into real high beta names like those. So I would rather go with steady plays right now than go into these mid and small cap in a big way. We will nibble, but not in a big way. So I would rather be away from these names right now.
Okay, all right, no, absolutely. Point taken there. But broadly, the view at Helios now is that enough damage has happened. I mean, for now, right? And this is a little overdue. Yeah. Absolutely.
Yeah, overdone.
Samir was with us on the program. I don't know if you saw that, the Confessions show, Mistakes Made, over the last Friday. And he was kind of saying that actually in the context of global, his point was that global is looking good and India is looking somehow bad. So it should not, I mean, it should align. My only thing is this, if this global thing, and we're not really clear, right? You spoke about DeepSeek, etc. Will that be an issue? How big an issue? So actually... so that's the only thing. Yeah, sorry, go on.
Prashant, actually you're right, because the 7 guys who rallied in the US and which pulled up the rally for the NASDAQ and S&P and everybody there were all related to OpenAI, to AI rather, artificial intelligence as such. And if DeepSeek is going to be such a cheap alternative, which anyway was going to happen. I mean, I don't think it was when it's going to happen. It's whether it will happen or not. It was only when it's going to happen, right? So it's happened pretty early in its life, I think, in the life of AI, that is. And I think all these guys have to catch up there. I don't know whether how long this will last or how long will this pain will go on in the AI bit. But one thing that we are very clear about is if India can have I think the rush of money outside India, in fact, I don't know whether you're aware, in fact, year to date, the outflows out of EM are $7 billion, and most of them have happened out of India per se, and that all money has rushed to US. I think the rush is mainly because of the currency as such. And if we can give an answer to that, I think the whole, all the FIs are pretty panicking on the rupee right now. I mean, they're I don't know what reason is there, but whenever you talk to them, they said, look, we are very concerned about the way the rupee has been propped up and we expect the rupee to depreciate sharply and stuff like that. So I think that is what we need to answer, and I don't know how that's going to be answered as such. So let's see how that works out. I think the main flow is because of that uncertainty on the rupee rather than anything else.
That's point taken. Absolutely. And I was also wondering, sometimes you look back at history and there are points in time when you, obviously it's only clear with the benefit of hindsight that was the point, right? November 2022, Chat GPT was announced, and that sparked off this big rally in AI, data centers, robotics, what have you, right? I mean, that has essentially been the big theme. Of course, I mean, when it came out, I don't think anyone realized it, but it just sort of, that was the point, absolutely. Dinshaw, thank you very much. Great speaking with you, and thank you very much for joining us. Great conversation, and I hope, you know, some of what you're saying pans out and we see stability sooner rather than later. Thank you. All right, well, we'll take a quick commercial break here. We'll come back and we'll tell you what's happening in dealing rooms. Important check. Nimesh is going to help us with that in just a bit.
Welcome back. Some signs of stability, some kind of recovery from the lows. At least it appears as of now, on a closing basis, the bulls want to try to defend the 22,800 odd mark. That said, let's get an insight in terms of what's going on in D Street Chatter. Nimesh, it's been a painful trading session. A bounce is due, not come about today. But what's your reading?
Well, Ajay, you said the bull wants to defend. I don't think how many bulls are left now with the kind of carnage we've seen in the broader markets, right?
Yeah.
Again, the mid-cap index is down 2.5%, small-cap index is down 4%. It's not a single sign of recovery in that broader market indices. And this is after, I mean, if you look at 1 month, all these indices are down more than 10%. So clearly, at least more than 10% fall, and you call it a bear market in those sectors. So clearly that's playing out. The real estate index in the last 1 month is down 20%. And we're seeing, big reaction in the stocks as well. I was looking at Anantaraj. That stock in a single day is down 18%. That's the kind of pain we are seeing in the broader market names, Nigel. And now there are clear signs of capitulation from very large holders, retail investors, you name it, and they are looking to sell or at least book the losses. So that's the kind of mood which is there in the system right now. I guess even from a flow perspective, while DIs have been supportive to some extent, but the bigger fear is the large selling that is happening from the FIs over the last many days. Even there, the one positive feedback was I was told that there was a bit of reallocation happening across emerging markets, and to that extent, the large selling in India seems to be largely over. So maybe that's something to watch out for in terms of whether the FI numbers turn positive. If not turn positive, they're less negative in the days to come. So that's something to track going forward. I guess technically we've broken that another crucial level of 22,900 on the Nifty. 2800 at 29,900 is a level to watch. If that gets taken out, then you'll see further selling in the broader market names. So that's overall feedback. But purely, looking at the screen, looking the way the mid and small cap has collapsed, I guess there is clear signs of capitulation now in the broader market stocks.
Well, indeed, and the stocks have got hurt very hard, Nimesh, and portfolios as well. But let's see, tomorrow we hope to get some stocks from you in the second part of D Street Chatter. For the time being, thanks a lot for joining in and giving us all of those details. Well, let's get in Mitesh Thakkar. Mitesh, at least it appears for now 22,800 will be defended. What's your view on the index and individual stocks?
Nigel, I think for the day, yes, maybe. But I still believe that we have a good chance of testing 22,600, 550 zone. And if we break below that, even lower levels. The structure is turning weak, and that is my worry. So for the timing, I have an STVT on Zydus Life. That's STVT with a stop at about 932 and a target of 904 can be looked at. And also an STVT on DV's Lab with a stop at about 5605 for targets of 5530.
Okay, all right, got that. Thanks very much, Mitesh, for the trades. Let's go back and revisit some of the numbers that we've seen and some of the sharp reactions that have played out through the course of the day. And definitely IDFC First Bank is one of them. The stock really never recovered. It's been down almost 7-8% after the third quarter earnings print came in slightly below estimates. The issue really is on asset quality and the fact that the MFI pain is continuing, even though the management is guiding for it to peak out in the fourth quarter. We did catch up, as I said, with Mr. V. Vaidyanathan, CEO of IDFC First Bank, on the way forward.
That it's not like a dramatic swing happening towards corporate. We just like to grow it just almost in line with the retail book now. We don't want to swing more towards retail, etc. It's already doing well. Now, to your margin thing, we think that roughly around the 6-ish odd % we should be able to sustain in the longer run. Next year, of course, is because base effect of MFI will not be there. So income growth of the bank will, traditionally income growth has been like 20% and all. Maybe it will come down a little lesser. But the important thing, OPEX also will come down. So we believe that the next year is a transient year, and then after that, the next 4-5 years, we see a one-way track. So short question on NIM as such, we expect some stability.
All right, that was IDFC First Bank, the management there talking about the path forward. Sudeep Bandyopadhyay of IndiTrade Capital is with us, and as we're saying hi to Sudeep, let's just take stock once again. For what it's worth, I mean, the bulls are trying to defend now the 22,800 mark. The mid-cap pain also continues, 1,400 down, but I mean, yeah, the market's not fallen further. Trying to pick on silver linings here, Sudeep. Sudeep, what's your advice? Let's talk about, if we can just put aside all the gloom and doom and the, doomsday scenario kind of feeling, if we can put that aside and focus on earnings, is there anything that you saw over the weekend, over the last 2-3 days, where you feel that the underlying growth is good, the commentary is solid, and maybe, one can actually take a medium-term call? Any stock, any company that stood out for you last 2-3 days?
Surabhi, ICICI Bank, of course. I mean, it goes without saying. I think fantastic set of numbers in spite of all this gloom and doom. I think great numbers. I would also put Ultratech numbers in a category which is close to that. The expectation was much lower, but Ultratech did well. There was a problem as far as demand is concerned, but the cost management was exemplary, and they continue on their growth path. So I think both Ultratech and ICICI, amongst the large companies, definitely stand out in terms of Q3 performance. And I would definitely look at both if there is a significant correction in either of these scripts, but there hasn't been. So we'll have to, if somebody is going to be investing for long term, they should look at that. I just want to mention one more thing. Yeah, I know this is a gloom and doom kind of a scenario as we speak, and markets have been falling rapidly. There is this deep seek, which is kind of destabilizing US market as well. And one doesn't know how US market reacts today once it opens. But we are into a week where we end the week with a budget. And budget is a tool in the hands of government to do a lot of things. And remember, this is the first budget, full budget of this government. So I think this is a great opportunity for the government to do multiple things. Yes, there are challenges. Yes, there are, the fiscal discipline needs to be maintained. But still, in spite of all these constraints, a lot can be done, and the market mood can be changed if the budget is, what we expect, or what even we can't expect is better than what we can expect.
So Sudeep, it appears you're expecting something. That's good news. Hopefully there'll be some delivery. You mentioned a few words out there. Government has got the tool in the hand. You are a little bit optimistic. So the hope is that, at least nothing negative comes about in this budget. But I want to ask you, Sudeep, about a couple of these stocks like Tata Steel, which has seen a fair correction from the recent peak. It comes out with a set of numbers, I think, in the next 3.5 hours from here on. So let's run our viewers through the expectations. Top line degrowth of close to around 5%. EBITDA number will take a harder knock. It will be down by close to around 25%. Remember, for the volume numbers, we already have that with us. So deliveries have come up by around 8.5%, which is good actually. They have capacity that's coming on stream, so that's what helps them. The UK business is going through the refurbishment, and that's why that's down by close to around 12%. While Netherlands, the deliveries are up by close to around 18%. It includes some bit of, an element of the movement between Netherlands to UK. So that's why, in fact, it got a bit of a bump up. So that's about the volumes number. Why is the top line decline? Because pricing has been very weak, and that's the pain point. However, now for Q4, you're expecting prices to stabilize. Hopefully, China gets its act together, and that's what could support prices. Moving to the margins, the weak average selling prices will lead to a drag on margins. But better volumes and lower costs, coking coal costs should cool off. For JSW Steel, it cooled off by around $34 per ton. So hopefully, there is some cool off even here, and that's what could help them. The losses that Tata Steel Europe is expected to reduce. So the number we are working with is around negative $58 per ton. That's for the European operations. For India, it's expected at around 11,300 rupees per ton. As always, commentary will be crucial. What are they seeing in terms of demand on ground, both in India as well as in the European operations, and any kind of debt reduction plans. The stock is corrected from 180 to 130. We'll have to see how much of the bad news is in the price. Sudeep, your view. JSW Steel, actually, the numbers are pretty good in a difficult, scenario that's playing out. And now they're saying $30 per ton of coking coal cost declined in last quarter. This quarter will be another $10 to $15, and pricing will stabilize. So things should look better in Q4. Your take?
Absolutely, Nigel. I think this cost, which is coming down, is definitely helping the steel producers. And both of them, JSW as well as Tata Steel, should benefit. Also, there is a strong possibility that some anti-dumping measures will be announced by the government. JSW has been talking about it, coming most probably in early February. And if that does happen, this can probably help in Q4 as well. I'm not sure whether it will happen in February, but JSW seems to be very confident about it. And let's see what happens there. But that anti-dumping duty, whatever and whenever it is imposed, will definitely help this industry in a big way. Let's wait and watch what happens. But this coking coal price reduction has definitely helped, and Q4 should be better. That's what I expect.
Thank you very much for that. Do stay on. Need to slip into a very short break. Some more stocks. Yatharth Hospitals reported their numbers, and it was a muted set of numbers. The bottom line has gone up by only 3.4%. Margins have contracted sharply. From 28%, it's down to 25%. So despite a near 30% increase in the company's top line, because of the margin contraction, profit growth has been flat, and the stock continues to remain under pressure. Remember, just last month in December, I think, they had done a QIP and they raised money at a price of 595, and the stock today is at 424. Canara Bank too is down nearly about 4-5% on the back of a disappointing set of numbers. So the stock is under pressure. IOC, again, a big miss. The numbers were just flashing about 10-15 minutes back. Sudarshan tells us this is the worst set of numbers in the oil marketing companies. Big miss in the company's GRMs, gross refining margins below $4 per barrel versus expectations of $6.5-7 per barrel. So IOC is under pressure, and Swiggy has taken a big knock, 8% down. We'll get into a break and come back. Welcome back. About 5 minutes left for markets to close. The Nifty is still down, close to about 270 points, but above 22,800. The problem is in the broader markets where the pain is running deep and wide. The mid-cap index is down 3%, advanced decline ratio at 1:10. We're in conversation with Sudeep Bandyopadhyay. Sudeep, we were just chatting with Dinshaw Irani of Helios Capital, and he said perhaps this is the time to go out there and buy individual stocks, at least some of them. Be selective, be cautious, but go out there and look, hunt for ideas. Anything that you like?
I think, if you're a long-term investor, definitely this is a time when you should start looking for bargains. One area which I definitely would consider is the pharma. There is absolutely no doubt in my mind that this is one sector which should do well over a period of time. And if you're a safe, and not an aggressive investor, maybe you can go for the biggies, Sun Pharma, maybe Lupin, maybe even Dr. Reddy's. I think these are good bets in this kind of a market from a 1 year plus kind of a time horizon. You can also look at, it's my all-time favorite, Reliance. I think correction has been sharp and deep over a period of time. From 1 year perspective, with the kind of value unlocking which is possible, definitely Reliance can be looked at. Insurance space, I like LIC, and that can be looked at. Some of the platform companies which have corrected deeply, including Zomato, can also be looked at.
Okay, all right. So those are some ideas to go with. We're quickly sort of moving towards the end of today's trade, and it's 1,500 down still on the mid-cap screen. So I'm very quickly taking stock of the key losers today: IDFC First Bank, Loris, Anantraj, a couple of others like Tejas Networks down in a big way. Just to round this off, you mentioned some platform companies. Sudeep, beyond that, there are some mid-cap IT companies. Like I still remember Coforge was a massive mover and some great numbers to back, right? So would you buy anything in IT in this fall?
Well, I've been, positive on some of these IT companies. Look, I don't know what generally IT will perform, but some specific pockets of IT which are catering to segments which are in a, cyclical and structural upswing. Let's say travel and tourism. We all know that travel and tourism is doing fantastic all over the world. So IT companies catering to travel and tourism, whether it's a RateGain Technologies, whether it's Coforge, definitely will do well. And this has been my theory for last 1.5 years. I maintain that, and it's kind of getting reflected in their numbers. Coforge talked about how the airline industry demand is helping them continuously upgrade their performance. So yes, Coforge can be looked at. So can RateGain Technologies, and this correction, whatever correction is happening in these stocks as well, provides an opportunity for acquiring them.
Sudeep, counting down to the close. By the way, Swiggy is at 408, so now getting very close to its issue price of 390, while Zomato, which was above 300, is now down to levels of nearly 200, 205 on Zomato. So the correct has been swift, and the correction has been running deep for many of these platform companies. Well, it's been a tough Monday morning. The Nifty ends down 270 points, holding above the 22,800 mark. But intraday, we did breach that level for the first time since June. Benchmark indices falling more than 1% across the board, selling pressure. But the mid-cap index down 3%, small-cap index similar cut, advanced decline ratio was 1:10. IT stocks led the fall. HCL Tech Mahindra, Wipro under pressure. Other notable losers include Hindalco, Shriram Finance, Power Grid, Tata Motors, BEL. On the way up, ICICI Bank was the only one in the banking pack, along with State Bank of India in the green, and then some consumption names like Britannia, HUL.
Okay, let's now talk about the brutal sell-off in the mid-cap and small-cap arena. By the way, at an index level, while the mid-cap index has sold off almost 3%, the small-cap index is down 4%. That's the extent of the fall. Talking about the losers, we're just outlining some of those names. Look at Swiggy, it's down 9%. Lotus Lab about 12%. Piramal Enterprises about 9%. Big list of losers out there. NetWeb down 13%. It's just been a sea of red across this space. In terms of some of the major result reactions today, CDSL was quite disappointing, 10% lower. Keynes is down about 6.5% as well. There's Canara Bank, which is down about 5%. So these are the negative result reactions. However, imagine on a day like today, Bank of India has managed to do really well. The numbers were quite good. Asset quality improved quite dramatically. Stock was up about 5.5%. Those were some of the key trends that come out. But otherwise, yes, you have to acknowledge the fact that it's been a very painful day for the broader market. Okay, and with that, it's curtains on what has been a manic Monday yet again on the street. 22,817 being the last rate on the Nifty. We'll take your leave on that note. That's the team of Closing Bell. But don't go anywhere because all the action continues. Markets Forward coming up next.